And the Cash Flow CFO is the entrepreneur's lifeline for cash management, for having strong financials, and really being in a position as a business owner to have somebody that can help you navigate all of the financial complexities of growing, scaling a company. Today, we're going to be talking about how to be financially ready. That's one of the things that we do well. We want to help business owners create an asset, which is their business. It's going to be the biggest asset that they own in their lifetime. It also has the biggest upside for return on that investment of time and energy and output. And we want that asset to be able at any point to be, ability to sell it if they want to leverage it for financing, and to use it to continue to provide financial a resource for themselves, for their employees, all the things that a successful business does.
Excellent. So I'm excited to dive in. I think, the first thing I would like to touch on, because I think this is kind of the most obvious and where a lot of our conversations have started. What do you see in terms of what are some of the top things that you are focused on in terms of helping your clients be procurement ready? Like what are those few basic things that they should be thinking about in order to successfully go after those large contracts with government agencies and large corporations?
Yes. Well, I think the most important thing to highlight here is that these are going to be large contracts. It's going to have a large impact on your business and your organization. So how do you be financially ready for something like that? Well, there's lots of different things that you can do. Some of them, all the way from the most basic, right, is having accurate, timely financial statements so that you know the health of your business. You know where you're at with, your sales goals, your revenue that's being collected and coming in the door, which equates to cash flow. It's understanding how you're spending that money when it comes into the business, and having a plan. When you bring on a large contract, right, you're going to have a lot of delivery costs that go along with servicing that contract. And so to be financially ready, it's to, number one, know exactly where everything stands in the business before you bring those contracts in from a financial perspective. Number two, how are you going to service that contract once you are awarded it? And then number three, it's, there's a lot of things that we'll dive into that are more of the little nuts and bolts there, but, having a plan in place, being financially ready, having a line of credit is one example, right? So that if you have a slow paying customer, right, which some of these bigger clients are going to be, they're going to have longer terms before you receive that cash. So you're going to have to pay your team, but you're not going to collect that money. What is your plan? How are you financially ready to be able to absorb that into your company? So there's a lot of in between there, right? And I know we'll talk in more detail, Jean, but that's kind of just setting the stage and getting everybody to think about things in a way that, when you're financially ready and you're prepared to take these contracts on, the other thing is you can speak about the plan, right, to somebody who's considering awarding you a big contract. If you can speak to it, that means you understand your numbers, you understand the flow of everything in your business, and you're going to sound, so much more prepared versus somebody else that's kind of just winging it and doesn't have all these pieces that we're going to talk about today in place.
Yeah, before we dive into some of the content, I think it would also be really important for people to understand, when I met you and I learned about your business, the Fractional CFO, quite frankly, I wasn't even aware that that was a skill set that I needed. I have a strong back office, so we have our bookkeeper and team, but can you just set the context, like what does a Fractional CFO do? Why is it important to have someone like this on the team, especially as you're thinking about scaling and taking your business to the next level?
Yeah, absolutely. So I think before I dive into all of those specifics, I want to just kind of give a visual for everybody that's with us today, because there is a lot of confusion of what is a CFO, what do they do? So imagine this: you're the business owner, you're driving down the road in your car. Sitting in the front seat next to you is your CFO. They're looking out the front windshield and they're saying, all right, here's where we're going, here's how we're going to get there, and here's how we're going to be profitable. So they're forward facing. Sitting in your back seat is your bookkeeper and your tax preparer, and they're looking out the rear view window of the car. Everything in their viewpoint is historical. So the CFO is really the one that's creating the forward looking, here's how the plan is going to, be. We call it the profit roadmap in our business. And that's really just, having somebody that, if you've ever gone to your bookkeeper and said, can you prepare me a budget? And they just kind of look at you like a deer in the headlights. That's why, because their skill set is, I'm just looking at historical data and I'm putting it in its place so that when you review your P&L and your balance sheet, you know what happened, what the results were. Okay. So a CFO's responsibilities are creating that annual budget for the business based on what the business's growth goals are. So you're going to look at, where are you at now? What has your historical revenue been? And then what's the projected growth? And how are we going to achieve that? How many units of each item that I sell am I going to sell? And being able to have that forecast that goes along with the budget. And then reviewing that monthly. So once your bookkeeper produces the financial reports, you need to sit down with your CFO and review budget versus actual. Where did we hit the mark? Where did we not? What do we need to adjust? And you want to make sure that those financial statements are timely. So within the first 10 days of the new month, you should have all these reports and be reviewing them with your CFO so that you can make decisions that are not, very outdated and not going to have the impact and be trailing by several months. In addition to that, they're going to do calculate your burn rate. So that's a minimum of 90 days of cash that you would need in your business. If, God forbid, you didn't get any sales, you still need to keep the lights on, keep the doors open. What is that cash burn? And they're going to help you to understand that. In addition, they're going to be preparing a staff utilization schedule. So a staff utilization schedule is going to help you to understand the staffing needs of the business at the current volume, and whether you're overstaffed, understaffed, when is the right time to hire, who do you need to hire, how much can you afford to pay, job costing. This is another big one. So looking at each of the jobs that you have going and understanding on a month-by-month basis where you're at with those. In addition to that, access to funding. So they're going to manage that relationship with your banker. And they're going to be the ones that are going to help to make sure that you're using any funds that you have with a line of credit, or, if you have any SBA money that people still have idle money left over, that they're looking at, how do I deploy this to get the biggest return on my money? Those are the types of things that your CFO is going to do for you.
I was on a call yesterday, and this is, I'm going to say this is fairly new to me even, and I've been in business for over 40 years. I have always relied very heavily on my bookkeeper, my accountant, my tax planner. And I thought, well, yes, I was definitely managing, I was doing the right thing. It was interesting because I was on a call yesterday and we were talking about, a person like yourself, this fractional CFO, and the role. And what my coach said to me, and just emphasizing the importance of this role is, a lot of people think that, oh, this is an extra nice to have. And so they're not really focused on it. They feel like, all right, if I have my, accountant, my bookkeeper, I'm good. I get my reports. I know what I'm doing. And what my coach said to me was, if you don't have a person like this, it could potentially be costing you money. And so
Absolutely.
maybe just to share with the group, and again, it's not about, I just think for small businesses, it's about up leveling and sharing this information so that people know what types of resources they need to have in their business if they are on that trajectory to getting those government contracts and getting those large corporate clients. Not having someone that understands this could be costing you in many ways. Can you talk a little bit about how that might show up for someone?
Sure, absolutely. Well, I think one of the biggest exposure risks that business owners face is, let's say you do win a contract and it's a sizable amount of a contract. if you don't have somebody that's doing job costing and managing, when you bid that job, you're putting together what you think it's going to cost you to deliver the service. And if you don't have somebody who's managing all of the expenses as they're incurred and putting them in a report for you to view, budget versus actual, you don't know if you're going to be profitable or if you're going to be, losing your shirt until the very end. And at that point, it's too late. You can't make any changes. And so, that's just one example, but also understanding, I can't stress enough what an amazing opportunity it is to win these types of awards, right? To get these contracts and have this, one deal could bring you in $100,000, let's just say, where if you sell, just like your normal sales cycle, it's going to take you a while to hit that 100,000, right? So I think where having a fractional CFO is somebody that's monitoring and understanding, how is this going to affect my operating cash flow? Who do I need to bring on in addition to the current team I have to fulfill this contract? And how am I paying for them? So they're making sure that the business is not, risking running out of cash. It's like, it's this great thing that they're getting this big contract, but then at the other side, if it's not managed properly and you don't have that CFO that's doing that, it could ruin your business, and it could, be the thing that undoes all the hard work that you've done over the years to get to the point where you can, take on those bigger contracts.
Yeah, agreed. I will tell you that, as somebody that's putting these deals together, what I see is having someone with your skill set on the team really allows you to have those conversations and be empowered when you are at the negotiating table with a government agency or a large corporation, who often will try to get you to lower your price. And what I see happening is that, if a vendor does not have a real, and many vendors don't, let's just be clear, there's a lot of us who will outsource and say, all right, I'm going to give this information to my bookkeeper or someone on the team to create a budget. But without really having that understanding, it becomes difficult to negotiate in a situation where you're trying to onboard a new client and they're saying, we need you to sharpen your pencil. So that's the other area that I see, having, being empowered in this way, and even bringing that person into the call. Because if you think about how large corporations work, they always have a chief financial officer who's sitting side by side with that business owner and who participates in those types of conversations.
Mm-hmm.
Let's just talk about some of the other things, because I think we kind of touched upon, the role of the fractional CFO, which, I can't emphasize, how much I've learned about it and how important I think it is, and what's some of the things that they can do. You mentioned staffing utilization. And in our conversations, you also mentioned creating KPIs around that. That is another next level step, quite frankly, that even in all the years that I've been in business, I never really understood the importance of doing that and how it can empower an entrepreneur to make those critical decisions about scaling. Can you talk a little bit about what that looks like and give maybe some examples? Like, how do you determine when it's time to hire, and if that, how that hire is going to contribute to the business?
Mm-hmm. Absolutely. So a staff utilization schedule is where you're going to list all of your team members and you're going to put what percent of their role is revenue generating, client facing, right? And so that's going to give you, and then you plug in their salaries, you plug in their multiplier, which is how much you're marking up their salary for what you're billing it at. And that's going to tell you how much revenue you can generate with the existing team that you have. Now, when we marry that together with your cash flow forecast, then that's where you're able to see, okay, in months 1, 2, 3, this team fulfills, it matches, right? My revenue forecast matches the total revenue that I can generate based off my staff utilization schedule. Well, what happens when you say, okay, I'm going to increase by 5, 10, 15% over the next 3 months, just making up some numbers here, you're going to have to squeeze more staff utilization time out of either the existing staff that you have, which means you may go back and adjust their utilization percentages and say, okay, if you did some direct labor and indirect labor, I'm going to alter that so that now you're more direct labor versus the indirect. Or it's telling you, hey, it's time to hire. And then you look at, well, what position do I need based off of delivering what it is that I'm selling, right? And then from there, it's this, game that you play. This is where your CFO comes in and works their magic, is you don't have to, as the business owner, sit down and figure all this out. That's what the CFO does for you, is they're creating all of these supporting schedules that are going to make the climb of revenue in your business much, much, much more enjoyable and palatable, because I'm sure we've all been there at some point. You have a huge spike in revenue and then you go, oh crap, how am I going to deliver on this? I need to hire, and you're scrambling. And it's, yes, no business grows like this all the time, but the more you can manage this with your team and your labor force, the less stress you're going to experience as you continue to grow and scale your company.
Yeah, that is such great information. The other thing that that has interestingly come to my awareness is, what do you do with the money? And there's not a lot of really good, solid advice out there. I think a lot of entrepreneurs, that's an interesting problem to have. And from a cash flow perspective, sometimes you have cash, sometimes you don't. And so what are some of the ways that you are advising clients in terms of what to do with the money?
Yeah, that's a great question. So there's two parts to that answer. Number one is, this is where it's so important to have that forecast and the budget, because depending on your business, you may have seasonality. You may have, a time that your customers just aren't buying as much, and you're still going to have incur expenses. So we want to look at, what are my cash needs over the next 12 to 18 months, and have that rolling always cash flow forecast, so that you're putting money aside for the times are going to be a little bit leaner in your business based on your business model and the industry that you're in. So that's number one. Number two is, once you've gotten that piece in and you say, okay, I still have money that's left over. When we talk with our clients, we're talking about some big bucket allocations. And so I'll walk you through those, Jean, and for everybody that's listening. For every dollar in revenue that you bring in, it equals 100%, let's just say. And that 100% needs to get split up over 4 big buckets in your business. So the first one is cost of goods sold, or for our service-based businesses, cost of revenue. But for simplicity, I'll stick with cost of goods sold. General and administrative expenses, marketing expenses, and profit. And the reason that we lump profit in there is because profit that you see on your P&L is not actually profit that you see in your bank account all the time, right? That's money that, based off your business model and operating, that's how much you've created in profit. But it still needs to be, further planned out, because that profit number you see on your P&L is servicing any existing debt that the business has. It's paying income taxes. It's investing back into the growth of the business, and it's paying, part of that owner's compensation, whether that's dividends, distributions, that kind of thing. So those are 4 big things that your profit has to take care of. And so when we look at the dollar equaling 100%, we're going to give a percentage to each of those buckets. Now, when you get to the point where you're looking at your profit, it's doing all the work it needs to do, and there's still money left over, then that's where we look at, okay, where am I reinvesting this back into growth? So the reason we have that come out of the profit bucket is so that it doesn't affect your operating cash flows, and it's not going to ruin all of the plans that you have in place with your cash flow projections and all the things. But it may be, okay, we have some money left over, and our growth goal, over the next quarter is 10%. And so that we know, when we have a goal to increase revenue, we always reverse engineer that sales pipeline. So how many units of what it is that you're going to sell does that 10% represent? And then you say, okay, let's just say it's 10 units, and when I look at my sales funnel and I reverse engineer it, I know that, I've got 4 touch points in my sales funnel, and my conversion rates for each of those touch points is X. Okay, well, you work backwards until you get to how many leads do you need to buy in order for it to move through your sales funnel to hit those 10 units sold. And then how much is your customer acquisition rate? Now I'm going down the rabbit hole, Jean, but this is really important so that you see how it all connects and it takes the guesswork out of running a business. And when you have a fractional CFO that's doing this analysis for you, your job as the CEO is so much easier. So when you understand your customer acquisition cost and how much it costs to acquire a new lead based off of, because we're tracking our marketing channels, right, everybody? So we know, maybe Facebook is better than Instagram, and maybe going to live events or sponsoring a booth is more a return on your investment. You're going to look at all that data and say, okay, go to my marketing team. Hey guys, I need 200 leads and I can afford to spend, $6 per lead or $100 per lead, whatever it is. Now everybody in the company has a clear KPI of what success looks like. And nobody's saying, hey, I feel like you're just not doing a good job. No, hey, the numbers are telling me this. How do I help you to meet the numbers? So that's how you manage your business through KPIs. And you're able to dissect all the levers in your business model so that you can get what we call predictable profits.
You want to know something? And I hope everybody, on the call is having this aha moment. I will tell you that, when I was, just starting out in business, and even today, thinking in terms of, we have a multi 7-figure business, and I'm like, okay, I want to grow that business. And so my brain can only think of the growth based on what I know, based on what's surrounding me. And so having a model like you just talked about, really the sky's the limit. And that's a beautiful thing. And I want all the entrepreneurs on the line to really understand this, because I feel like once it was like once you peeled back the layers and said, and again, this is a conversation that I have with, my leadership team. And we said, okay, we're at $1 million as an example. And my brain can only think, well, getting to $1 million was hard. Like, all right, so how do we get to 2 million? It almost seemed like, oh, wow, that's going to be a big leap. And what I realized is that I can predict to 50 to 60 million dollars. And I will tell everyone on this call that in the government contracting space and in the corporate space, that is a real possibility for people in professional services. You don't have to be limited by where you are today when you have a model like this that will help you to plan out. If you said, listen, I want to get to, and this should be, quite frankly, the way a lot of us should be thinking, especially in this corporate and government space. There is no shortage of opportunities. What there is a shortage of is people that can do the work, because again, you have to have all of these systems in place. You have to do all of this strategic planning. Some of the KPIs that Andrea was talking about in terms of like a staffing plan, but what's the difference between 10 people and 100 people? Zero. There is no difference. It's about strategic planning and resources. I think this is also an important conversation when you're, even going to the bank, right? I mean, the more information you have, you're just empowered to go after these larger contracts. So I just want to emphasize how important it is to start shifting our thinking beyond access to capital, which means, oh, I'm going to go to the bank and I'm going to ask them for some money to finance my government contracts. This is a whole different level of strategic planning, scaling, and growth. All right. The other thing I want to just highlight, Andrea, that you said, which is really important, the buckets. And, this is new for a lot of people. So I just want to kind of re-emphasize this. This might be something that you all can start taking away and talking to your current financial team about. One of the things that I think was very important that Andrea talked about was that 10-day window. So if you closed your books on March 30th, by no later than April 10th, you should have a monthly report that at least provides you with the basic information. And I'm just reminding you all of this because we see a lot of clients who are not set up this way. So this might be something that you can all take away from. The other area that I just wanted to highlight for everyone is the profit piece, what to do with the profits. And what Andrea was talking about is that that profit margin really needs to be large enough to cover your taxes, the owner's compensation, and potential reinvestment in the business. So that means, and again, just working with an expert, that those margins are large enough, because that's the other thing I see in the in the corporate and the government contracting space, that when you go to a government client as an example and you say, oh, my profit margin is 10%, I can tell you right now, I'm working with a client that will say, oh, that's too much. And so just to be able to say to them, oh, well, this is not me putting this money in my pocket. This is where this is going. Out of that profit margin, what is it, Andrea, 30%, maybe even more, could potentially be going into taxes. And again, the owner's compensation is another piece of it that I like how you kind of laid out, because a lot of owners right now are either just taking money off the top, or they're putting themselves on salary, which is really kind of, I would say, weighing down the business a little bit.
Yeah, it really depends when we talk about owner's compensation. And I think this is a great one to kind of pause and dig a little deeper into, because it is one that we see a lot of confusion around. And it really depends on, when you look at the buckets and your business model, if we say your direct labor, right? If you're a business owner / operator and you're part of delivering the services that you're selling, then yes, you should be on salary. You have to be on salary for any type of owner, and each entity has its own rules. So I don't want to go into that much detail. But what I would like to say is that when you look at your business model, you as the owner, if you're delivering services, need to be part of your direct labor, which is part of your cost of goods sold bucket, for the percent of your time that you are delivering those services. There's a couple reasons for this, because number one, you want to train your business. If you're going to replace yourself in that direct labor role, which should be the plan, right? We're working towards that. You've got to be training the business model to afford somebody at market rate to come in and take that role from you. So that's number one. And number two is that the whole reason we have a business is to take active income generating activities and move them to personal passive income generating activities. So I want everybody to think about that and understand, yes, we're in business because we love what we do. We love who we serve. We love the fulfillment and the reward and all of those things. But at the end of the day, this business is an asset that you need to be treating it as such. Just like you would go to the bank account, your bank, and say, hey, I want a bank account that gives me a high interest rate. Why wouldn't you do the same thing for your business? And at the end of the day, we're putting kids through college. We're paying for aging parent care. We're setting ourselves up for retirement. A lot of business owners, it breaks my heart, I don't see them have retirement plans in place. And they're banking on, oh, I'm going to sell my business and that's going to be my retirement. The reality is 80% of businesses that go up for sale don't sell because of various reasons, but don't plan on that being the case. So when you look at your owner's compensation, talk to your tax preparer, your tax strategist, say, what's the ideal makeup of my compensation, whether it comes from, how much is in payroll, how much is in distributions or dividends, and really be strategic about it, because at the end of the day, you have an opportunity here to bet on yourself and making a lot more money on yourself running this business than you do in any other investment vehicle. And it just breaks my heart when I see people not take it seriously and look at it from that lens. It's just so much missed opportunity and cash left on the table for them personally.
Yeah, you're preaching to the choir. When I first started my business, I tell this story all the time. I'm sure people have heard it a million times. My goal was like, if I could just get to $100,000, because at the time when I started my business, I just wanted to have that multi six-figure income, because in my mind, I was like, okay, I can take care of my bills. And I didn't know what I didn't know, that $100,000 was actually less than $30,000 net, which was not enough for me to live on at the time. I ended up getting into just a number of issues, from tax issues, because again, I didn't know when I first started my business. I was like, oh, I'll just worry about it later. And so I think that's the other important takeaway from this conversation, to get people to start thinking about the planning stage, so moving beyond like, oh, my profit margin needs to be this. But really, I like what you said, Andrea, about thinking about your business as an asset and using it as a potential tool. So there were two key things that you said that I want to unpack. One is retirement. And so can you just talk a little bit about some of the strategies that you have, implemented for your clients as it pertains to, retirement strategies? Like, what does that conversation look like?
Yeah, so there's quite a few different vehicles that you can put in, and a lot of these have a really great tax savings components in them, right? So, depending on the company size and the makeup of your team, and whether you need something like competitive benefit packages, having a 401k in place, having a health savings account in place. Um, if you don't have a big team and a 401k doesn't make sense for you, you can have a simple IRA. There's so many different vehicles that you can put into place that are going to help you, pre-tax dollars, right, as well. And your team is going to be happier too, because they're going to have a very, um, a rich benefits package. And I think that that's just one vehicle, right? And those are the retirement accounts, the traditional ones. But I think also just planning, like, how many years do you want to be in this business? What do you want to sell this business for at the end of those number of years? And working backwards, we're really big on, let's just reverse engineer it. Let's not take all the guesswork out of it. If you know where you're at right now, and in 5 years, you know where you want to be, what does that look like? And it's just that whole planning piece and being intentional about it, and sitting down and I know a lot of businesses in the first couple of years, right? It's just, you're hanging on, you're flying by the seat of your pants, and you're making those gut decisions like, I think this makes sense. I feel like this does. But let me tell you, once you get to that 850,000 or a million, you have got to have somebody on your team that can help guide you, because you get to a point in business where you're no longer grinding and growing, growing, growing. You've gotten to a level in your business where it now becomes protect what you've built, and don't make stupid decisions because you don't have the right team around you to help say, hey, you don't have the right insurance coverage, or you have exposure risk over here, or there's so many things that's where your fractional CFO is going to help you just be like, hey, I've been in this industry for 25 years. I've worked with hundreds of businesses. This is what I see. Let me help you fix it, versus being reactive when something goes wrong, because it's inevitable, right? That's how we learn and grow as business owners. But the least amount of financial impact you can have on your business, the better chances, of continuing to scale at a stable, steady, you know, uh, rate.
And just for the folks on the line, that some of this might sound like, well, a little out of reach. I just want to share a little bit of context. When I first started my business, again, going back to that $100,000 model, and just thinking, okay, I need certain amount. Once I started working with a professional, it just raised my awareness to two things. That number one, absolutely must put money aside for retirement. That is, in my mind, non-negotiable. So I want to just say, even if you're just starting out, maybe you're not at the $850,000 mark, maybe you're at the multi-million dollar mark. I do think retirement planning is a really important part of the strategy. And even for my team was 2 people, we put a 401k in with a match, which basically means that not only was I able to put money away for myself, but the company was matching it. And I cannot tell you, that was a painless exercise that has helped build up a significant retirement savings, for me and my family that would not have been there. And I used to think I couldn't afford it, by the way. I used to think I couldn't afford it. And here's something else that you should all be aware of. Corporations and government agencies love to see that you have a comprehensive benefit package in place. It basically says to them, it equates to stability. And so you can include the cost of that 401k, of those vehicles, into a package that your larger clients will subsidize. And I mean that respectfully, but a lot of the business in professional service is about providing people to do certain jobs. And I remember my early days thinking, oh, I can't afford it. Not true. You can build those costs into your rates so that you are attracting best in class. Let me unpack something else that you said, Andrea. Passive income. This is the other thing that I wish I knew when I first started my business, that I should have I should have been thinking about passive income. I certainly have it in place now, but I feel like, oh, wow, I missed such a great opportunity. Can you talk about passive income and what that looks like, and what folks might want to start thinking about, on this side, passive income?
Sure, absolutely. So the passive income that I'm referring to is the individual side, right? So you've taken the money, the profits, the comp package out of the business, and now you've paid taxes on it, you've done whatever you need to do based on your business entity structure. And now on the personal side, you're looking for vehicles that are going to, be putting your money to work for you without you having to actively do a lot there. So a lot of the business owners that we work with, they look at real estate, right? That's a huge one because real estate provides a lot of depreciation tax write-offs that will help reduce your active income that you're generating. So there's a lot of strategy there with real estate. We see a lot of business owners that will purchase the building that their company is operating out of, rent it back to the business. That's one way. The other way is looking at, high yield investment accounts. So, I have some clients that are S corps, and they're constantly moving big chunks of money over into these, 5 to 9% interest rate accounts, and they're just hands off. They don't have to do anything with them. So there's lots of ways that, each individual can look at what makes sense for me based on, my growth goals, my risk tolerance, and the time that your money has to work for you, because compounding is what you were referring to earlier, Jean, when you said, yes, I was only taking out small amounts, but I did it for a good amount of time. And what happens is the compounding effect of that money is, it's amazing. If you guys haven't looked into how much compounding over, different time frames will do for you, absolutely dig into that, because there's so much power in that.
Yeah, yeah. And I think, again, for the business owners, when you start increasing your awareness to what is possible, you can start with something small. The thing that I like about personal passive income is it really does provide you with this sense of security, in that, your business is not the only vehicle you're able to. I was talking to a client yesterday, who has gone through this process. Again, a woman in professional services, a minority woman-owned business, just like us. She was at the $1 million mark, and she was like, all right, you know what? I'm going to use this framework that we're talking about to set my goals. And she was sharing with me that over a period of 10 years, okay, she went from $1 million business, and her government contracts totaled over the course of, like, she's at 50 million now. And once you get to that level, and it wasn't that difficult, in the sense that, she was able to use this framework to create a staffing plan. And when she was at the entry level, she didn't have the money, but she used this framework to say, okay, if I'm going after my next contract, I'm going to need to hire a business development person. This person's going to cost X. And so as she was steadily meeting those milestones, she watched her business take off, you know? So she really stepped into the role. And I think that's the other powerful part of this conversation is that you step into the role of visionary, of planner. You start thinking, wow, I'm not the person that has to service all the clients. I can use this framework. I can make this happen for myself, for my family, and then leverage this personal passive income. And she was sharing that in addition to her $50 million business, she said, Jean, I had a number in my head, like we all do, like, my $100,000. Now it's like, oh, if I only had X amount of dollars in the bank. And she was like, using this framework, I got there. And she was talking about how she's creating generational wealth for her family, like her grandkids, because the investment in the real estate and some of the other vehicles has enabled her, in her case, to stop working. Okay.
Yeah, absolutely.
Um,
The other side of that too, Gina, is that when you are ready to exit your business and sell it, there's different types of trusts that you don't pay any taxes when you
let's
sell.
talk about selling, because that was my other dream. I was like, oh, okay, I'm just going to sell my business, as I get ready to retire. And I tell folks all the time, well, I'm there, I'm ready to retire. And what I learned in our meeting with you, Andrea, in March, you said, well, if you were thinking about selling your business, you should have been looking at that 5 years ago. And I was like, what? Because in my head, I was just like, oh, once I get to this revenue level, because that's what I was basing my decisions on, then I would be, a business that was attractive on the market. And I was shocked to find out that that is not the case. So can you talk to us about selling your business? What should you be thinking about?
Absolutely. I think the first thing you should be thinking about is your business doesn't sell on revenue, it sells on profit. It's going to be a multiple of your profit. And there's, two different ways to look at the profit. I won't go into those details right now, but just understand that it's a multiple of your profit that you're showing. And when you go to sell your business, I mentioned it earlier, 80% of the businesses that get listed for sale don't sell. And that's a really sad statistic, because think of all the employees, all the businesses that just close their doors. The employees lose livelihood. The customers, the clients don't get the service they had. The suppliers lose, it's so bad for the economy, every which way you look at it. And the reason that those businesses don't sell is because, number one, most of them have no plan in place. They've never looked at it and said, how am I creating value in my business? Number one. And number two, how am I reducing the risk for a potential buyer? So when we talk about reducing risk, those are things like not having three big customers that make up all your revenue, having a diversified customer base. What types of revenue do you have? If you have a reoccurring revenue model, your business is going to be valued much higher than somebody who has to go out and sell, deliver, and start at zero again. Looking at your team, right? How long have you had the team in place for? Is it a team led, managed, delivered company? Or is the owner, if the owner walks away, does everything fall apart because they were the hub of everything? Looking at, some of the other components is having clean financials. When you go through due diligence, say you list your business for sale, you have a potential buyer, there's an LOI, a letter of intent, and they start doing their financial due diligence. Let me tell you, no stone will be left unturned. And if you don't have clean financial statements that take the risk out of the potential buyer taking your business over, I've seen so many deals fall out when it comes to the due diligence phase, because a lot of business owners, they don't value the record keeping, whether it's financial, legal, all the things. And when somebody else comes in, they have nothing else to gauge the business on other than this historical records. And so you want to make sure that they're very clean. and you want to show the profit, right? How are you bringing in customers? How is the team delivering it? And how is it profitable? And can I replicate that without you, the owner, being involved? So those are just a few super high level things about you should be looking at when you're getting ready to exit your business. And yes, 3 to 5 years is the minimum. 3 is the minimum. 5 is you're going to get the highest value for it. And you're going to be in that 20% that actually do sell when that comes to it. And also, you know, the other sad truth is that there's just a lack of buyers. So when you have a big marketplace and only a few buyers, that drives the price down. And so you might be able to sell your business, but you're not going to get anything, that you think it's worth. So that's really important to look at. And then the other side of that, completely, let me flip that around for you as the business owner who's looking at selling it, is there's an exercise we take our clients through to understand how much do you need to sell this business for to be able to retire on, right? So there's a lot of times we'll go through that exercise and they come up with, 2 to 10 million. And then we look at their business and do just a quick, dirty valuation. We're like, yeah, you're looking at like 500,000. That's where the 3 to 5 years comes in. Let's close that gap. Let's get it to where you can sell it for the price you need to sell it for in order to retire. And then that's where, and a lot of times people hear fractional CFOs and they go, I don't know what that costs. It sounds scary. I don't know. I will tell you, if you can take your business from a valuation of 500,000 to 2 million, and you're paying a fraction, tiny fraction of that to this finance professional, your fractional CFO, that's a huge, ROI on that investment. So
Yeah, and it just raises your awareness to the possibilities because I think a lot of people, are stuck. I know I was stuck and it's really hard. Like, who do you talk to? Again, my accountant, I love them. They've done a great job for me, but they're sitting in the back seat, so I'm in the front seat. I am driving the conversation and I have blind spots. I don't know, or I didn't know about passive income. I did not know about retirement. I was not even aware that I could dream as big as I want to, using this framework to get my business to the next level. In fact, Jenny and I were talking about this just the other day, because now, as an example, if I said, and I'm just throwing this out there, but if I said over the next 5 years, I want to get my business to $10 million, that is a conversation I can have with this fractional CFO who can help me with the strategic plan to get there, so that you're not going from a million to 10, you're taking steps along the way. You're evaluating that. I like the other part of that in terms of selling the company, because at the end of the day, I love my business. I love what I do. But I see myself, wanting to do something different, wanting to travel. And I want to have the option, let's just say, I'm not saying I'm selling. I'm not saying I'm not. I want to have the option. I want to be in position. And so I think for everybody on the call, that's also an option that's available to all of us to think, all right, if this is what I want to do a year from now, not a year from now, 3 to 5 years from now, 10 years, looking at those profit margins, right? And, because with the government contracts, I'm like, oh, you're at $1 million, but I've seen clients at $1 million that are generating less than $10,000 profit, because their businesses are inflated with expenses. And that's the other thing that I think is just important to mention on this call. Looking at your own compensation structure, looking at what you're running through the business, so that you can be proactive about where you really are and what you need to do to get your business to the next level.
mhm.
So yeah, Andrea, this was just for me eye-opening. I know that we wanted to talk about retirement, selling the business. Is there anything else that you think is, as we start wrapping up this discussion, that folks need to know, about Cash Flow CFO, about considering a service like this for their business?
Sure. I think one thing that's very, very important is that you look for a service When you talk to a fractional CFO, you want somebody that has a proven process that they're going to take you through rather than just saying, okay, what would you like me to do? You mentioned that, Jean, you've got blind spots. You don't know what you don't know. And that's why you've hired this expert in that role. And so having someone that can lead you through the process of, number one, the first thing you want to do is make your business as profitable as possible, your business model. And once you get to that point, then go out and start growing, but first let's look at what you have. Let's make it as profitable as possible. And set that financial foundation as strong as possible so that when you go out and take these big leaps of revenue growth, you're able to manage it and it's it's an enjoyable process. And the other thing is find a CFO that has a growth mindset. There's a lot of financial professionals that are risk adverse, and that doesn't necessarily need to equate to scaring you, and into, don't do that. It's not, I don't think that's a good idea. No, we always say to our clients, we never tell them no. We always say, sure, let me show you how we can do that. Then when we break it down into those steps, then they might look at it and go, yeah, I don't want to work that hard. Or no, that doesn't make sense for, the involvement I want to have, whatever it may be. Perfect. Let's rework the plan. Let's rework the outcome. But we're always saying, sure, here's how what it's going to take to get what you want to have happen in the business. So growth mindset, abundance mindset, all of those things are super important for who you surround yourself with in your business when you're on this path to growing it and scaling it. And the third thing is make sure you do your due diligence. When you're looking at a CFO firm, make sure you're, talking to their clients, you're doing reference checks, you're looking at how long have they been in the business, what are the certifications of the CFO team. I don't recommend going with just a one-off person because what if, they get sick and they can't come in or something. Having we all know we're service providers here. Having that backup, having that cross-trained person is super important. And just do the financially sound things, have SOPs in place, have a management dashboard, have KPIs, have all of these things that are going to release the stress off of you, the business owner, so that you can continue to go out there and confidently and enjoyably, make those new big strategic relationships that are going to bring in these big contracts. And that's the fun stuff, right? That's the enjoyment that the business owners get. And a lot of times they try and wear too many hats and it just slows them down and it sucks all the fun out of running and growing a business.
I agree 100%. And I just feel empowered, working with someone like yourself. I know I've learned so much from you. And I think, just the freedom of kind of being able to look at, my business from, wow, I don't have to be stuck where I am. Here are my options. I can grow, I can potentially sell, but just having a partner to look at, I think was critical. And so I just want to kind of wrap this up today by saying a couple of things. Number one, Andrea Jenson and her team are part of our inner circle. One of the things that I want to be intentional about as in the work that I do is helping people make connections. Because all too often, I find like, oh, people find out about stuff and then you just see them kind of take off, but there's no information about how they got there or what their strategies are. And so Andrea and I consider her a partner and again, part of our inner circle. And so we want to continue with this framework of Masterclass in order to give you guys exposure to our inner circle. Andrea and I are running in the same circles and there's just so much to unpack. So I hope that you will continue to engage with us. Andrea, how do people get in touch? What should they be thinking of in terms of next steps if they're interested in having a conversation with you or a member of your team?
Yes, absolutely. So our website is the cashflowcfo.com. And you can download some great resources there. You can book a call to talk to me personally. You can email me at Andrea@thecashflowcfo.com. And we are going to be having a workshop that is going to cover a lot of the content that we talked about today. So you can find out more about that. Let's get on a call, see if it's a good fit for you and what your goals are with your business. And we'd be happy to help you implement a lot of the things we talked about today. Implement those in your business, get some of these foundational pieces in place so that you can confidently keep moving forward with your growth goals, and just know that you've got, all the financial readiness resources in place for your business.
Awesome. Well, if there's any questions, folks, feel free if you want to put your questions in the chat. Otherwise, I will be sharing your contact information with Andrea. So I'm sure they'll be reaching out, and certainly you all know me, so you can reach out to myself or my team with any additional questions. We hope to again continue with this masterclass series, so you'll be getting some updates from us in the very near future. So Andrea, thank you again. Jenny, thank you for joining. This was a pleasure, and I loved this conversation. I hope that everybody that's watching gets a lot out of it, and I look forward to us continuing this conversation. I think there's a lot, we talked at so many high-level concepts today. I think we could dive into any one of those topics and have a full session on those.
Absolutely.
All right. Well, listen, thank you. I really appreciate you joining us today, your time. We learned a lot, and I thank you.
Oh, you're welcome. It was a pleasure. Thank you.
Okay.